Chapter 2 Income Tax Act 1961 Concepts and Terminology 2.1 Key Concepts under the Income Tax Act 1961 Assessment Year AY Under Section 2(9) of the Income Tax Act 1961, the term assessment year is defined as a period of 12 months beginning on the 1st of April each year. This period is used for filing income tax returns and for processing income earned in the preceding period, known as the previous year. For example, the assessment year 2020 to 2021 begins on 1st April 2020, covering income earned primarily between 1st April 2019 and March 31st, 2020. The assessment year is always 12 months long, during which income tax is imposed on the total income earned by the assessee in the previous year. Taxpayers submit their returns within set deadlines, and these returns are then assessed by the Income Tax Department, a process referred to as assessment. Income tax calculations are compared with the amounts paid, and an assessment order is issued if necessary. Thus, the year in which these processes are carried out is termed the assessment year. Previous year. According to Section 3 of the Income Tax Act 1961, the term previous year refers to the financial year immediately before the relevant assessment year. In the above example, the previous year for the assessment year 2020 to 2021 would be 2019 to 2020. The Act requires all assessees to follow the financial year, which runs from April 1st to March 31st, as the previous year. The previous year may be shorter than 12 months. For example, in the case of a newly established business, it would begin from the date of establishment up until March 31st of that year. Assessee. An assessee is defined as an individual or entity that is liable to pay taxes on income earned in the previous year. Section 2(7) of the Act defines an assessee as any person by whom tax or any other amount payable under the Act is due to the government. The definition of assessee includes every person in respect of whom any proceeding under the IT Act 1961 has been taken for the assessment of his income or of the income of any other person in respect of which he is assessable, or of the loss sustained by him or by such other person, or of the amount of refund due to him or to such other person. A person who is deemed to be an assessee under any provision of the IT Act 1961. A person who is deemed to be an assessee in default in any provisions of the IT Act 1961. Person. Section 2(31) of the Income Tax Act 1961 defines person inclusively, meaning it encompasses several categories rather than restricting itself to one specific definition. This broad definition includes the following types: individual, a natural person, Hindu undivided family, HUF. Though not explicitly defined in tax law, it refers to a family unit practicing Hindu religion and united in holding property. Company. As per the Companies Act, a company refers to a registered entity formed and governed under the Companies Act 1956 and the amended Companies Act 2013. Firm. Defined under the Partnership Act 1972, a firm is a relationship between two or more persons established to conduct a lawful business, with each partner acting as both agent and principal. The firm's primary features include profit sharing and mutual agency. Association of Persons, AOP. An AOP comprises two or more individuals who join together voluntarily for a common purpose with the aim of generating income. Body of individuals, BOI. A BOI consists of two or more persons coming together, usually by operation of law, with the intention to earn income. Local authority. This includes bodies such as municipal corporations or panchayats that perform local governance functions. Artificial juridical person. This refers to an entity not included in the previous subclauses, yet treated as a person under the Act, such as deities, universities, or charitable institutions. Difference between association of persons and body of individuals. Number 1. For association of persons, any person can be a member. For body of individuals, only individuals can be member. Number 2. For association of persons, there is common will and desire among the members. For body of individuals, under this, common will and desire is lacking. Number 3. For association of persons, they voluntarily join together to carry on the activities. For body of individuals, it is formed by operation of law. Number 4. For association of persons, example, ABC Limited and PQ & Co., a firm, joins together for a particular venture. For body of individuals, example, X, Y, and Z join together for a particular venture but do not constitute a firm.